Hi, everyone. Welcome back to another episode of Deep Dive Podcast. I'm your host, Rachel Wolfson. Today, I'm very excited. I am speaking with Rena Shah. She is the COO of Stacks. And in this episode, we're talking all about Bitcoin Layer-2s and building on Bitcoin and Bitcoin DeFi. And Rena is just such a plethora of knowledge when it comes to all things Bitcoin and the Bitcoin L2 ecosystem. So I encourage you guys to watch this entire episode and not miss anything. Before getting started with today's interview, I also want to remind you guys to smash that like button, hit subscribe, stay in touch. I've got so much more content coming your way, and I don't want you to miss a thing. So without further ado, let's get started with today's episode. Hey, Rena, how's it going?
Hey, Rachel, long time no see.
I know. Thank you for joining me here in person in Austin, Texas.
I mean, it's both of our hometowns right now. We had to do in person.
I know. And it's like, for once, we're both in Austin. Usually
we're
this
actually
never
home.
happens. Yeah, I know. So that's really exciting.
Can't complain.
Yeah, definitely. So Rena, before we get started with the questions, I want you to tell our listeners about yourself, what you're doing at Stacks, and kind of talk about your Bitcoin journey.
I mean, my Bitcoin journey has been a long time coming, probably 10 years in the making. But ironically, I got into Bitcoin in 2012, give or take. It was my first job out of college. I just graduated college. I'm a petroleum engineer. I was working for Chevron, and someone environmental was talking about Bitcoin mining. They're like, the mining of Bitcoin costs as much as like a small town like country. And I'm like, you have to be kidding me. I'm like, if you look at the electricity input of like Bitcoin mining and what we produce for oil to actually fuel electricity across the world, I'm like, you had to be kidding me. So while offshore, imagine this, like living on a drilling rig. Offshore, I had a spare computer, started mining like the same day with like a GPU, nothing fancy. And I started going like farm to table of understanding what it's like to actually produce Bitcoin. And like the more and more you think about that you're producing internet money kind of from anywhere, and then thinking about how it impacts like global policy, global markets, it clicked for me. And so from then on out, I kind of got hooked and I started mining Bitcoin from 2012 through maybe like 2016, started working on like smaller Bitcoin projects, actually tried to push the PR to Bitcoin GitHub, failed miserably because it's not easy. But I really just wanted to be a part of the story. And I got this amazing opportunity in 2018 to join Binance. And that's what really kind of changed everything for me.
Wow, yeah. I mean, you probably told me you joined Binance, but I forgot. That's really cool. I'm a fan of Binance. That's really
early
awesome.
Binance. So wow. I started working with the global team on their stablecoin business, BUSD. But when the opportunity arose to actually launch Binance US, it was time for me to actually launch Binance as an exchange in America. So from 2019 onwards, I solely worked on Binance US. So you can think about all the regulatory of setting up an exchange in the US and customer acquisition and learning what retail actually wants to see, because that is a foreign concept in crypto of like understanding what retail matters and what they want to see. And that's like really shifted it. And like anybody who works in crypto, if you get the opportunity to start with an exchange and see the full cycle of how the markets work, how the order books and how volatility impacts their business, it's huge.
Wow, that's interesting. So you're very early. I mean, you were earlier than me. You started mining in 2012.
A happy accident though, but I'm pretty grateful that I got the happy accident. I wouldn't have thought to mine, but to me it felt like no different than like drilling for oil, because I'm like, I'm producing a physical commodity. This looks digital, but it just clicked.
That's so cool. Do you still mine Bitcoin?
I have a few ASICs. They are still mining at a loss, I'm not going to lie. But the fun fact is I have run a Bitcoin node concurrently for 12 years. So okay. I have run a Bitcoin node this entire time. I've never turned off my Bitcoin node. Wow. I run a Lightning node too. Like, you got to support the network and do your part.
Yeah, I mean, Rena, you know everything about Bitcoin. And I'm a Bitcoiner. And
you are 100% a Bitcoiner.
I am 100% a Bitcoiner. And I just love that you're so knowledgeable with Bitcoin. I mean, you're early, you were with Binance. Now you're with Stacks, right? Yes. So in Stacks Endowment, can you tell us a little bit about what Stacks is and what the endowment is?
Yeah, so Stacks is the leading Bitcoin layer 2. We essentially are like a roll up to Bitcoin. We want to scale Bitcoin transactions and the throughput of the Bitcoin network. Now, if you think about Bitcoin and compare it to, let's say, Ethereum, there are no smart contracts on Bitcoin. So the execution environment is a little bit different than what you have for like Ethereum to like Polygon or all of the L2s. So essentially, you're creating like its own virtual machine that essentially you are building smart contracts in its own like contained execution environment, but the final settlement will always be the Bitcoin layer. So imagine any transactions that you do at really fast blocks at like the speeds that you would expect, a few seconds, but then ultimately the finality comes back to the anchor chain, which is Bitcoin. And if you think about it from this perspective, the Bitcoin network has never been hacked. The Bitcoin network has never been reorged. So if you want to do a transaction that has value to you, maybe it's a lot of money or it's expensive, you want the proof of work security. You don't want to use something that potentially could be hacked or has lesser security assumptions. And that's partially why I'm so passionate about Bitcoin L2s, is that we have this amazing system that started all of cryptocurrency for us, but we kind of underutilize it. And like, I feel strongly that the Bitcoin network needs to survive if we want to see any sort of crypto future on-chain world. Mm-hmm. And then from the Stacks Endowment side, essentially I run the foundation out of the Cayman Islands. I manage the long-term treasury, so thinking about portfolio management and how we do community programs like grants and accelerators and really fuel new builders.
Okay, awesome. Is the endowment new? Because I knew about Stacks and I actually didn't know about the endowment.
Yeah, so Stacks has had a pretty interesting history. So Stacks was an early project from the 2017s, 18s, and it went through a Reg A plus sale. So it was the only token project in America to do a Reg A offering, which went through the SEC qualified sales and everything under the sun through really challenging commissioners at the SEC at the time. But the project persevered, and essentially part of the mandate was that while doing an SEC qualified sale and offering, when you have a token treasury, you need to break it up and make it decentralized. So adhering to the progressive decentralized rails. And so that's what Stacks did for many years. Finally, in 2025, there was a filing called like a 1Z, which means we no longer have to report to the SEC and we fulfilled all of our obligations. So at that point, there was a community governance vote to basically operationalize the treasury and make it a little bit more efficient by creating one foundation that kind of is the long-term treasury in a tax-optimized jurisdiction, and then have a US labs go. And so we just consolidated all of the smaller entities to two. So it's the foundation called the endowment and the labs go, and we work together. We're wholly owned and operate as one.
Okay, got it. And the foundation is Cayman Islands, you said.
Yeah, and we actually named it the endowment because I treat our treasury like an endowment. Our goal is to make returns on our treasury and actually sustain ourselves from our own treasury. I'm not looking to have to sell our treasury or things like that. Your treasury should work for you and you need to invest your treasury accordingly. And that's actually why we called it an endowment than the standard foundation.
Okay, and then I'm assuming that that's a Bitcoin treasury, right?
There is Bitcoin in our treasury. There's Stacks in our treasury. There's stable coins in our treasury. We even keep fiat in our treasury, but it is a very Stacks and Bitcoin focused treasury.
Got it. I mean, it's good to diversify. And I mean, we're like really getting into it from the start because right now we're hearing so much about Bitcoin treasuries and like the price of Bitcoin has been up and down. Today it's over 70K, which is exciting.
We're like 72, maybe 73 right now.
Yeah, something like that. But with these Bitcoin treasuries, it's interesting when you only have Bitcoin in the treasuries. I mean, it could be very risky, right? Given the volatility of Bitcoin.
It could be risky just to solely have Bitcoin. Like you should always diversify your treasury. I think what we're seeing on the Bitcoin treasury side is that if you purchase Bitcoin at a higher price and you're below MNAV right now and you're going through your first, let's say, earnings cycle with your shareholders, crypto companies are not accustomed to actually being beholden to their shareholders and investors. And we are actually getting a lot of inbound from Bitcoin treasuries or DATs, for instance, on how do they generate return on their Bitcoin? Because you can't just hold the asset. It's not going to be enough. So they're looking Can we borrow against our Bitcoin?
Mm-hmm.
Can we lend against our Bitcoin? Can we stake our Bitcoin? And they're now kind of looking to diversify from just the standard hold and hodl.
Yeah. Okay, so that's interesting. Right now we're at a very interesting time for Bitcoin, right? Like we saw this all-time high. Then I don't even know if you'd consider that we're in a bear market right now.
I mean, I think
It's
that
kind of,
we are
yeah.
to an extent,
Okay.
but we're on the rebound. But you know, a lot of Bitcoin volatility was flushed out in October. There's mass liquidations from some other DeFi projects that blew up from other ecosystems, and that had macro effects on Bitcoin, as it should. Like Bitcoin sets the precedent and the tone for all of our crypto markets. And I think it was kind of a lesson of you can't have nice things yet. Like that's kind of how we are being treated as an industry, that we're not quite there, even though I find this bear market to be odd because we're at the point where more and more banks are comfortable with crypto. You have so many ETFs. You have banks now custodying Bitcoin directly. I think Morgan Stanley was one of the more recent ones who've now been Bitcoin forward. And I think the challenge is we're getting institutional interest in areas of adoption, but it's not necessarily fueling kind of the price narrative.
Yeah, I mean, it is interesting. And I think with the new administration, right, if you want to say new administration, we saw Bitcoin reach all-time highs. And so you would think with institutional adoption, like that would be maintained. But I think, like you mentioned, the DeFi projects that,
I mean, DeFi projects, some of them did have like mass consequences last October with, you know, cascading liquidations. And what I actually thought was like kind of a nice win for the industry, if you want to always find the silver lining, is that all the liquidations processed on chain how it should, which is like massive. Like we finally have built this technology that we operate no different than a bank and actually operate even more efficiently, that we're mass liquidating instead of how banks might do like a grace period or a margin call and give a little bit more time to liquidate. So I thought that was actually a win on the crypto side.
Yeah. Yeah, no, I mean, I think like overall the crypto industry is still interesting and it's still winning, even though like this whole AI boom is starting. I mean, it also depends on where you are, right? Because if you're in San Francisco,
it's been there for a while.
Yeah, it's like,
have you checked out some of the AI BTC stuff? There is AI agents that are publishing Bitcoin news on chain as an ordinal autonomously.
Okay, I didn't know that.
AI BTC, it is so cool, and they are spamming the Bitcoin network. They are flooding transactions, and this is actually kind of funny. Some of the Bitcoin core developers hate this AI agentic movement, but Bitcoin is permissionless. That's the whole point. So if they want to spam transactions, let them spam transactions. And these agents are protesting BIP 110. I think there's a new BIP out, and it is on a Bitcoin performance improvement proposal, on wanting to censor the Bitcoin network with the soft fork, so that Rune's transactions and Ordinal's transactions can't make it through. And it's very contentious because Bitcoin typically does not soft fork, and to censor transactions is saying that you don't want to see creativity on Bitcoin.
Wow.
It's a new Bitcoin proposal. I believe it's 110.
I had no idea about that.
It's very new, like 3 days new.
Wow, okay. That's probably why I didn't know about it.
And so this AI BTC agent is silently, well, not so silently, but protesting by putting more messages on chain.
And that's all through an AI agent. Like, is there a human behind that?
I have no idea who the person who's built the agent or anything like that, but I just find it fascinating that an agent saw a proposal, realized the proposal could be harmful for the culture of Bitcoin, and chosen to protest en masse.
But when you say protest, like where are these messages going?
So they published this newspaper called like AI BTC, like a newspaper, like an online newspaper, and each piece of news is its own inscription.
Oh,
so it's its own transaction. So you're adding transactions actually to the Bitcoin network, which any Bitcoiner should be happy about, because the more transactions on the network, the more fees are generated for the network, and the miners are paid who sustain the network. So I actually think it's quite ingenious, but I can maybe see the other side, but I'm just like, if an agent wants to do this, an agent should do this because that was the entire point of Bitcoin, permissionless.
Definitely, yeah. I mean, you have to have an open mind, right? I mean, obviously,
Absolutely.
we're talking about Bitcoin DeFi. We're talking about building on Bitcoin. We're not just talking about holding and selling and hodling and all that. So you have to have an
Completely.
open mind about what it is that you're doing,
I
right?
mean, you have to have an open mind. Otherwise, you're just going to be back in the Bitcoin is a store of value gold narrative. And I mean, this is an interesting time. There is massive amounts of uncertainty in the world, which is causing people to have fear, and they're buying gold ETFs or physical gold and actually like holding on to gold. Do you want Bitcoin to stay in that certain same narrative cycle, or do you want it to evolve as it can be a store of value as an asset, it can be a collateral asset, it can be a productive asset? Like, I think there's more to Bitcoin than just being a replacement to gold.
Okay. Yeah, no, it's interesting for sure. So let's talk a little bit about, first of all, for those listeners that may not know, and I think our listeners are pretty advanced, they probably know, but what does it mean to build on Bitcoin and what does it mean to do Bitcoin DeFi?
So to build on Bitcoin is basically like you want to build a dApp or a smart contract with Bitcoin finality or Bitcoin security. Again, you can't build directly on Bitcoin because the opcodes don't allow for it. But essentially, you want to build an app where I can enter into a smart contract, deposit some form of Bitcoin, whether it's Bitcoin in its true form or a bridged version of Bitcoin like SBTC from Stacks or WBTC or any of that, and then use that Bitcoin value into a lending contract or a perpetuals contract. Basically, you're using the value of the asset that you're putting in, which is Bitcoin, and getting something in return.
Mm-hmm. And so Stacks is enabling this.
Stacks enables it. So we created our own Bitcoin asset on the L2 called SBTC. And basically, you can take Bitcoin, lock it into the bridge. It's a trustless bridge, so it has this kind of automatic enablement that you can bridge in and out without any censorship or anything like that. And once you get this receipt asset, you can do anything that you want with it in DeFi. So think about, I want to buy a house and I don't have cash, but I'm sitting on Bitcoin and I need a loan instantly. Ironically, that's actually something I've done. Like my home in Texas is purely financed by Bitcoin loans on chain.
How does it work though? I mean, because it's really interesting. And I think a lot of people listening probably hold Bitcoin. Maybe they have one Bitcoin. They're like, oh, that's like 73K and I want to buy a house. Like, so
That's
how would
a
that
lot
work?
of money. It's
Yeah.
like it's like in some areas it's a full down payment. So what you do is you take your Bitcoin asset and you go to a lending protocol. If you're using Stacks, it might be Zest or Granite. If you're using, let's say, another chain like Ethereum, you might be on Aave, and you basically deposit your Bitcoin asset from your own self-custody wallet. So remember, everything's staying via self-custody into the smart contract. The smart contract will then open up a loan position and you'll set what your loan ratio is. So how much money you're trying to get out, how much collateral you're posting, and then basically it will determine the interest rate on your loan. So for example, if I put one Bitcoin in and it was worth 100K and maybe I took out a loan for 50K. So now I have this loan of 50K in stable coins, likely it's USDC or some kind of stablecoin equivalent. And now I can take that USDC, cash it out to my bank and actually physically buy a home. And to pay my loan, essentially my loan position stays open. So this is what's kind of cool. If Bitcoin value continues to appreciate, my loan is in good standing. I don't have to pay it back anytime soon. If Bitcoin, let's say, is dropping because of volatility, I can post more collateral to keep my loan position as is.
Interesting.
So it's kind of like having a line of credit directly from Bitcoin.
No, that's amazing.
Yeah, it's really cool, like where crypto ingenuity has come, because I would never get a revolving line of credit from like my bank ever.
Right. Yeah. And so all of this is is this open for US users only, or is this
These
global?
are
what?
global protocols.
Okay.
So the Zest protocol is global on Stacks. The Granite protocol, global on Stacks. I believe Aave serves a whole host of users. I think Morpho with Coinbase also has similar. So like you can create and tailor the type of loan structure that you're looking for.
Interesting. So I'm curious to know, with Bitcoin, when we did see the price fall,
Sure.
did you see users move away from Stacks, for instance? Like, how did this impact Stacks, if there was an impact?
There wasn't too much of an impact on Stacks per se. Like I think every altcoin will have some, let's say, mirror image to Bitcoin from a volatility perspective. But what was interesting to me is I didn't see any outflows of BTC on the Stacks network. So on the L2, there is about 4,000, maybe like 4,300, somewhere around that range of Bitcoin in the network that's either being used in staking or being used in DeFi. Even as Bitcoin price was falling, I didn't see any really mass withdrawals. So I think that's interesting that people are recognizing that even if their asset is slightly volatile, there's still no better collateral form than Bitcoin, and they're willing to continue to take some risk with it. It's measured risk, but they're willing to take some because you know that, price volatility will usually bounce back over time.
Yeah, definitely. On that note, how do you feel when the price of Bitcoin, because I mean, I can tell you how I feel, but I'm curious to know when you see the price of Bitcoin go down and go up, like what are your thoughts?
I mean, I think I choose war every day. So like my alarm clock every morning is actually a automatic like feed of telling me the price of Bitcoin. That's actually how I wake up every morning.
Oh my gosh, wow.
I know, it's a terrible idea.
How is that even possible?
I did a webhook, and so like it just goes to like my iPhone alarm, and it goes, the price of Bitcoin at 6 a.m. today is, yeah.
Okay.
Don't choose war like I did.
Yeah. No, I'm not going to do that.
But it kind of sets the tone for me of understanding what I'm getting into every day. And look, things are going to ebb and flow just like stocks. Like if Google went up today and Google dropped tomorrow, it doesn't fan. Now, if there's, let's say, a lot of downside pressure that it's steadily falling, then I have to think, are the fundamentals okay? Or is there something from a macro perspective that the market is just not understanding about Bitcoin? But, even from the fall from, let's say, 100,000 to, I think we went as low as 60 and then kind of bounced back to 70. That drawdown was not the largest drawdown on Bitcoin. I think the 20K, like the 20K down to like 7K and up was actually a larger drawdown.
When was that? Like 2018, 19, something
maybe
like that?
18, yeah.
Yeah, what a good buying opportunity.
Girl,
yeah, no, seriously. I was like, if it hits 40, it won't, right? But I mean, who knows? But I was like, that's a great buying opportunity.
But it's like, I don't concentrate on like the price swings of Bitcoin. What I like to see is the net inflows going into DeFi or the net inflows into Bitcoin treasuries. Like, are the inflows still happening? Because that's what matters, that if the inflows are happening, that there is still adoption coming.
Yeah, so Rena, this is all very interesting. What I'm curious to know more about is how the Bitcoin L2 sector has matured from where it was when you first started to where it is today, and then where it's going to go.
So we've gone through a somewhat wild ride on the L2 sectors. So about 2 years ago, Bitcoin L2s were all anyone talked about for like every narrative cycle. And I think there was like a fun like venture quote that in 1 year there was like 100 Bitcoin L2s or something like that. If you look at where the market is now, it's been like mass consolidation around like 3. And a lot of the other L2s are no longer really in business or serving like everyday customers. I think there's like 2 things to take away. One, unlike other chains, Bitcoin probably only needs 1 or 2 strong L2 solutions because Bitcoin itself is secure. So you really only need 1 or 2. I think the second kind of takeaway for me is that Bitcoin L2s need to exist. I think with the censorship of BIP 110 and the idea of people want to censor the Bitcoin network, like that cannot occur. You cannot censor the Bitcoin network. So if you want to have a robust on-chain economy with DeFi or staking or NFTs or what may it tokenized stocks, because I think that's the new flavor of the day. You need to do it on an L2 because that's the whole point. An L2 is flexible, it's scalable, and it's faster, and the fees are cheaper. And that's where you need to bring these activity at the end of the day. I've seen a lot of different Bitcoin L2s kind of take different varieties on how they approach security or how they approach their consensus module. And I mean, clearly I'm biased because I'm with Stacks, but for me, what mattered is if you're going to do a Bitcoin L2, are you fundamentally adding transactions back to the L1, supporting the Bitcoin security budget, supporting Bitcoin miners? And Stacks really is one of the few that continues to do that from the beginning of Stacks. And that's what has always stood out. I think there is a lot of things you can do with L2s, but we tend to get in this kind of creep of an L2 should be kind of general purpose rather than like an L2 is very like narrow focused on one thing. And that's where I think kind of the next era of L2s will go for Bitcoin. Like Stacks, I will say, is predominantly a staking or DeFi chain. If you want to do gaming on Bitcoin, maybe the Stacks chain is not for you, right? So I think you could see kind of differentiation.
Okay, so moving forward, you think that there will be different Bitcoin L2s that are going to allow for different things rather than just DeFi and staking?
I think so. Like I'd say Stacks' angle is very DeFi staking focus. We have now a lot of agentic agents kind of coming our way. So like I think there's going to need a need to make sure the chain is scalable for the throughput of transactions from these autonomous agents. But if you were to say we are going to be the best chain for gaming, probably not.
Okay.
Yeah, but that's like for gaming, does it need to be with Bitcoin? Like there's always kind of the trade-off.
Right. Now you mentioned agents coming to Stacks. Can you tell us a little bit about that and why we're seeing that?
You know, there's this army that I think is called like X402. They've started in other chains, and basically all they want to do is create this agentic agent that can kind of serve transactions in everyday life. So like one cool one that I saw built on Stacks was doing stablecoin payments through the Stacks network secured by Bitcoin autonomously. So it literally took a phone, called an Uber, figured out how to pay in a stablecoin, and just made it happen.
That's amazing.
I mean, we are living in the future.
That's amazing. And also, would you agree that stable coins or just crypto in general, like agents are going to be the biggest users of crypto? Do you agree with that statement?
I think they'll be the biggest retail users of crypto by far, like without a doubt. I think from my perspective, it's only a matter of time before all of us have a agent that has let's say a hot wallet that has like a couple $100 kind of attached to it, and it's doing our tasks like ordering Ubers, buying dinner, things like that. An agent will be handling a lot more of these everyday tasks, and like if it's going to handle it, it's going to use stablecoin rails, like realistically, because it's permissionless, it's scalable, and it's fast.
Yeah. It's so interesting because when we think, I feel like we're in this weird time in the crypto sector where a lot of this talk now is AI, and we're hearing, everybody is this and that. But I think what a lot of people don't realize is how closely and how important AI is tied to crypto.
I mean,
right?
I think that's a great statement, because think about agents. What do they need? Compute power, data centers. Bitcoin miners also fighting for data centers and data storage. So we have to emerge and embrace each other so that we're not just fighting with each other. It's kind of my view. So the idea of maybe, can you use some of the excess hash power from Bitcoin mining to help fuel data centers for AI agents? I think there's a symbiotic way to do things, and we haven't quite explored it.
Yeah. And I mean, I think there was one Bitcoin mining data center situation. It was
Core, might be Core Scientific from the news this week.
Right, exactly.
And that was so smart that they realized that, look, AI is going to stay. Everyone is using, the US government was using AI. Right. And so you need to find a way to generate excess power that can be shifted.
Right. Speaking of news, you just reminded me when I was researching Stacks and what's new with Stacks, What is this with Fireblocks? Is there an integration there? And if so, can you explain what it is?
Yeah, there's a new integration with Fireblocks so that you can do institutional MPC, so like multi-signature technology with Stacks. So now if you are an asset manager who has a pretty robust compliance program, you can actually deploy into DeFi. And it's huge because Fireblocks is one of the veterans in all of crypto for serving institutions to make sure you can securely multi-signature transactions. So imagine let's say a Bitcoin DApp, for example, can now take their Bitcoin, custody it with Fireblocks, and use the Granite lending protocol, or take out a futures bet or whatever they want to do, all with Bitcoin through Fireblocks. So like, I'm very excited to see this.
So that means we're seeing more institutions using Bitcoin DeFi then.
I think it's like we're on that like tipping point of the cusp that it's happening. And why I find it very interesting is you had this kind of explosion of like DAT summer last year of like everybody and their mother raised a treasury and created a pubco and went public. And so now they have to answer to their shareholders.
Right.
If you just have Bitcoin in your treasury and you didn't diversify or you didn't do anything with the Bitcoin, your treasury value is just kind of at the NAV ratio or even below the NAV ratio. Now, some of these Bitcoin treasuries are being sophisticated. Like, we have so much Bitcoin. Let's borrow against it.
Right.
Let's get some cheap stable coins and buy more Bitcoin. It's like, it's a really interesting instrument that they can now use if they have this really amazing asset, Bitcoin as collateral, and they can borrow against it, they can yield farm, they can stake, and they can generate income, which is desperately needed for their shareholders.
Definitely. By the way, a DAT is a digital asset treasury for anyone that's wondering what that term is. I always try to point these things out in case people don't know. But it's really interesting what you said about taking the Bitcoin, getting a loan, using stable coins, and then buying more Bitcoin, and then
stack your stacks.
It's amazing.
But they can do it on like a large global scale. And think about how many of these treasury vehicles there are. Now there's so much kind of idle capital that can be deployed. And what I love about this more so than an ETF, this Bitcoin is usable.
Yeah.
It doesn't have to just stay in bank custody.
But and there's still, and I think we had this conversation last time I saw you, like there's still a whole group of people out there that want to only hodl their Bitcoin. They don't understand Bitcoin DeFi. They don't understand building on Bitcoin. Sure. They don't trust the process. I mean, we've been burned so many times in crypto, Celsius, FTX, like BlockFi. So how can we change that narrative? Like, how can we tell people like this is okay? And I mean, Stacks has been around for a very long time.
I mean, I would hope that we're standing the test of time as we go on, but I think it's okay to embrace that Bitcoin DeFi is hard, or DeFi in general is just challenging of assessing risks in smart contracts and how you deploy. But I think we kind of as an industry could kind of break up of, you don't have to use an entire Bitcoin. You can use $100 of Bitcoin and try out something and see how it feels and see if you can get accustomed to it. And I think we just kind of forget that there is a different emotional appeal to how you treat your Bitcoin than how you treat maybe your other crypto assets, right? You probably have your Bitcoin on segregated ledgers that you probably never touch. And so you may not have taken out $100 of Bitcoin off the ledger. So I think kind of opening up the idea that you can start really small and try something out kind of is important.
But if you start small to try out, like what use case would you even do with, like, if I wanted to take $100 of Bitcoin and see what I could do? Like, what would I do with that? Take a loan out or what?
I mean, I would consider staking it and see what it's like to see extra sats now on your wallet balance, because you had this Bitcoin and now you can earn, a couple of percentage points just by having this Bitcoin and actually adding to the economic security budget of Layer-2s.
Mm-hmm. Definitely.
And like the rewards for most Bitcoin staking, Stacks in particular, are denominated in Bitcoin. So like you are getting more Bitcoin by putting your Bitcoin into the network.
Definitely. So moving forward with Stacks, like what can we expect next from Stacks?
I think we have quite a few things kind of in the pipeline. Kind of the biggest is improving our staking architecture and functionality. So in the past, you could only stake STX or native gas token to earn Bitcoin. Now our model is shifting that you can stake both STX and BTC to earn Bitcoin. So thinking about like yield, kind of like yield vaults of depositing Bitcoin, letting it autonomously, allowing you to take out loans against stables and then buy more Bitcoins or buy a Bitcoin backed stable. So like these trading arbs are pretty complicated for like the everyday retail person. So building that almost like as a managed vault.
Got it. Wow. No, that's really interesting.
I think everyone deserves to have like managed strategies or areas to trade the arbitrage of like Bitcoin futures and spot Bitcoin, but it's difficult if you have a job and can't manage these positions all day. And like our view has always been that every product that we built should feel accessible.
Yeah. I mean, it's something that I've always wanted to do is kind of like trade, right? See what would happen, see if I can make small, but I don't know how to do that. I don't know what I'm doing.
Like you would like, I'm sure like you were thinking when like Bitcoin was going down, like, man, should I have shorted Bitcoin? And it's like, how do I do that?
Yeah, definitely. That is what I was thinking.
And you're just like, where do I go? And
Right.
like, you would have to think about, do I have a Deribit account? Do I like, it's a lot. And like, we have overcomplicated things and it's time to bring it back where like everybody can understand how to do these.
Yeah, definitely. I mean, I think it needs to be easier because, you know, and a lot of people, not just myself, it's easy, well, not easy to buy Bitcoin, right? And to hold Bitcoin. Like it's not that complicated, right? But when it comes to the other things like we're talking about, it actually is very complicated.
I feel like staking is really the next wave of onboarding into Bitcoin. If you've bought Bitcoin and now you're just going to stake it, because you don't have to take out loans or anything against it, but you could still earn a modest return on your Bitcoin.
Yeah. I mean, yeah, for sure. That's what I should start doing.
And your Bitcoin can stay in self-custody with Stacks, so you can stake directly from your ledger if you wanted.
Yeah, definitely.
So I think like things like that, like shifting that you don't have to put all of your Bitcoin into like a hot wallet to do these things. You can do these from cold storage ledger devices.
Right.
And people forget.
Yeah, no, and I think just a lot of people don't understand how. There's not a lot of education out there either. It's mainly just like, what's the price of Bitcoin? Should I buy? Should I sell? I mean, that's really the narrative we're seeing.
Do you think that's maybe a function of people just emotionally treat Bitcoin different than like staking in Ethereum is pretty commonplace, like knowing about that?
It's a good question. I mean, I think so. But what's interesting is that, and correct me if I'm wrong, I think that a lot of the Bitcoin layer 2s were those lessons that we've learned from Ethereum that just shifted over to the Bitcoin ecosystem.
That's fair.
Right?
Yeah, I think that's like totally fair point. I think some of it for how they manage their staking systems is felt like kind of copycat to Bitcoin. But I think there are others, Stacks included, that really thought about it from the angle of, how do I make proof of work more robust and add to proof of work? And that's kind of like the route that Stacks did a consensus model. It's called proof of transfer. But basically, it's like when you mine Stacks, you commit Bitcoin. So that Bitcoin can now be rewarded to anybody who's supporting the network. So like there's a steady income stream of Bitcoin coming into the Stacks network. Actually, this is kind of cool. Since the inception of Stacks, we have given out over 4,000 BTC and staking rewards.
That's amazing.
So like our history has been long tied to Bitcoin, and that's how it should be.
So I also wanted to ask you, just based on that, we saw an explosion of Bitcoin layer 2s, I remember. It was like everybody, and there were so many Bitcoin L2s. And now I think, as you mentioned, there's like 3 of them now, basically. Yeah. So what about Stacks that has made it survive this test of time?
I think it's a lot to do with kind of our doing the Reg A sale and actually going through US compliance is tough. And like, it takes a special like breed of person to want to do that. And like, you got to give credit to Manib. Like he wanted to do this and he wanted to do this right. I think that has like a Lindy effect to an extent, because to like actually comply with the US SEC is a lot of work. I think the second is, unlike a lot of projects, Stacks has never veered from Bitcoin, and that's the truth. We've stuck to our course of, we believe in a decentralized internet or a Bitcoin economy, and like we don't care about everything else. So like we're not playing anyone else's game of gaming this, or really like privacy this or like the soup of the day. Like we're not necessarily playing that. We just fundamentally believe that there's no better asset than Bitcoin and we just want to make it productive.
Right. And I think that's huge is when you fully believe that narrative and you comply with the SEC, then you're good. But I think, if you don't have that, then you're probably not safe, right?
Yeah. And it's like, you have to believe that in kind of today's world where the dollar is devaluing against itself, what will be your only hedge against the dollar? And like, I truly believe it's going to be Bitcoin as my only hedge against the US dollar or the de-dollarization. And so I want to see Bitcoin inflation, a Bitcoin like hyperization. Do I need to see Bitcoin in everyday payments? No, but do I want to have the ability to use the Bitcoin security in my everyday life? Yes.
For sure. For sure. So I'm going to ask this question, and you don't have to answer it if you don't want to, but with everything happening in the world right now, right? How is that, or how do you think that's going to impact the price of Bitcoin? Because I've heard a lot of people say, oh, well, the price should be going up, right? Given what's going on.
Because war is like
Right,
the greatest
right.
revenue stream for like the US economy, right? Like that's like how like history would say like war is profitable for America. I do think that there could be volatility swings with Bitcoin kind of on the up and up, but I also could see a lot of fear and greed of Bitcoin probably could go significantly lower. Like I think it's going to be kind of a rocky year. Though I do feel like there'll be light at the end of the tunnel as these kind of Middle East situations hopefully resolve itself on the sooner side. And if anything, this kind of like tumultuous situation in the Middle East is proving that there's nothing in life that's as guaranteed as Bitcoin.
Yeah, no, I
that's kind of how I see it.
For sure. And I mean, yeah, I agree with you.
Like there's nothing more pure than that.
Right, for sure. It's also though a matter of like keeping your Bitcoin safe.
Well, I think
secure.
there's a lot of ways to keep your Bitcoin safe: cold storage, custody, recovery keys if you want to create that. There's this cool wallet. I don't know if you've tried it. It's a hardware device called Rider.
Never
and
know.
You can store your Bitcoin and create like a trusted circle for like if anything happens, how to get your Bitcoin recovered by like your mom. Or like you can create like I actually set it up with my family. So like
cool.
I put some Bitcoin on it and my family circle is like my siblings and my mom. And like, if anything happens, they can help me recover.
That's actually great. It's called Rider.
Rider, RYDER. And this is the best part. No private keys. It has an entire different like crypto signature and how it encrypts. So you don't have to remember your seed phrase.
Yeah, that's the
that's
worst.
That's an onboarding that you need.
Yeah. I should have Ryder on the podcast. If they're listening, I'm going to reach out to them anyways.
Wherever you are, call Rachel.
Yeah, for sure. That's awesome. Didn't know about it. But that's why I love talking to you, Rena, because you, like I said, you really are one of the most knowledgeable people I know in the Bitcoin industry. So I think that if anybody, and even our listeners, like if anybody has a question about Bitcoin, they should ask you. They should follow you on X. They should ask you. They should email you. I just feel like you know a lot and you've been at it for a long time.
I think Bitcoin is always going to be like one of the loves in my life. Like I can't help it.
Totally. Yeah. We're running low on time. Any final thoughts that you want to leave with our listeners today?
That's actually a fun one. Okay, let's see. I think people should get ready for kind of a maturation period that we're going to go through kind of as crypto as a whole. And I am most excited about kind of the new narratives with kind of going beyond store of value and Bitcoin payments. And like, I think we're now in this era of Bitcoin privacy, Bitcoin scalability, but even more so productivity with Bitcoin. Like that's kind of where I'm most excited and spend like all of my time thinking about of we have 8 billion people in the world. How do I get some sats to everyone? How does everyone get to feel like they are Bitcoin rich every day?
Yeah, definitely. Well, it's an incredible thing and I hope we accomplish that goal. And
one day.
Yeah. And I'm really happy just to talk to you and catch up because we're in a weird time right now, and hearing that a lot of these Bitcoin L2s are not doing so well, it's great to hear that Stacks is. So a lot of positive vibes here in this podcast studio today.
That's so kind.
Yeah.
Everyone should get to embrace Bitcoin as it is, and then everyone should have the freedom to do what they want with their Bitcoin, and that should be done on an L2 level. That's just how I believe.
Yes, totally. Rena, if our listeners want to follow you on X or get in touch with you, how would they do that?
My X is my name. It should be Rena P. Shah. My email is rena@stacksendowment.co.
Cool. Well, Rena, thank you. It's been a real pleasure.
Thank you.
Thank you. Special thanks to 4Labs Digital for producing Deep Dive Podcast. I'd also like to thank the sponsors behind Deep Dive. You can click the links in the show notes to learn more about each of the initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share.